Thursday, December 28th, market analysis, Stan Ehrlich. Happy holidays to everyone. We have a very steady, slightly higher market across the board this morning, and the very, very unusual situation where they are almost all three, the Spider, the DIA, and the QQQs are up almost exactly the same amount. That never happens. So 3/4 of a point, 65 cents, 63 cents higher momentarily. That doesn't tell the whole story. We have a minor new high for the trend on the E-mini. This is the March futures contract. It is a prime territory for a bearish engulfing ER sell signal. Only needs to get below yesterday's lows and close lower on the day. And then I'll have another bearish engulfing red sell signal. Now, the last one didn't work. It was a few days ago, a few days before Christmas. I definitely expected a bit of a dip so that the Santa Claus rally, which is working very, very well, and I'll get to that in just a moment, was going to offer a cheaper entry. It did for one day, the Santa Claus rally, and then it took off in our favor. But my ER signals system, technique, strategy, indicator, whatever you want to call it, has not kicked in a break, which I'm fully expecting any time now. Next chart is the Spider, and it is in the exact same situation as you would expect. Slight new highs, very small range today, holiday type of activity, if you want to call it that, and a prime target for a bearish engulfing sell signal. Hasn't happened yet. It does look like this market is running out of a little steam, but hasn't happened yet. Next chart is the Spider 5-minute bar chart. As you can see, this morning opened a little higher, gapped up slightly, fiddled around for a while, came down and closed the gap pretty accurately, and it's now slowly starting to come up a little again. Again, look at this. We're up 70 cents, 68 cents, and 55 cents. That's so close, net higher on the day for all three of them that it's highly unusual. Don't think it really means much. So let's see if this market will start to dip back down or not. But it's not doing it yet. The next chart is the DIA, oversold conditions. Prime target for a bearish engulfing sell signal. Again, the last one didn't work, but we've got plenty of great signals. They don't all work, but when they don't, we're stopped out, and that was a couple days ago, yesterday, with a small loss. And when they do work, they work very spectacularly occasionally. I mean, huge. October 13th last year, where I'm at 2 years ago. No, it was last year, sorry, was a gigantic turning point with a bullish engulfing at the bottom of the market, October 13th of 22. Now, the next chart is the Russell 2000 overbought at resistance. Gap to close at lower levels. I've got tons of reasons to believe that there's a break about to happen. Now, I'm not bearish. I'm not looking for any major top. This is a normal downside correction in a bull trend. I am basically intermediate to longer term bullish, and I've said so innumerable times since the bottom of the market in October of last year. So I remain long-term bullish, but bull markets have downside corrections. I catch them with ER signals, and the bottom of corrections with ER signals also frequently. So let's see what happens here. Now, the Russell never got higher than yesterday's high, so I'm not going to have a bearish engulfing unless we have a little more rally, then go back down. Next chart is Qs, overbought, higher high, prime target for bearish engulfing, not happening yet. Gap to close at lower levels, a little bit higher than the resistance level, which is that blue line. And that represents the previous high at the beginning of the bear market. In other words, the QQQ in the last couple of days has made new historic highs. Very important on a longer term basis in particular. At the moment, that could cause some minor problems, but it hasn't yet. But everything is there to start some sort of a downside dip, and it's just not kicking in. Next, NASDAQ futures, as you would expect, is basically the same thing. I just don't have the long-term history like in the triple Qs, because these obviously are born, have a little life, and then pass away when they expire. Now, overbought, higher high, not yet the lower low, would be relatively easy to do because yesterday's range was relatively small, but that doesn't change the fact that it could have a bearish engulfing, and it hasn't done it yet. What about our 5-minute chart on the March E-mini? As you can see, late yesterday, early this morning, higher highs, dipped back down again, trying to come back to new highs again. Just not getting that bearish action I was expecting. The Santa Claus rally is doing great. We bought at 7:05 a.m. on the 20th, the spider. Same time the next trading day, which was 2 days before Christmas, the 21st. And on December 22nd, the same time, 7:05 a.m. California time, the third position. For a little while, the first and the third trades were losing money, but there was hardly a time frame, only part of the first day, that the second middle trade, which we got long at approximately 471.20-ish, has been doing very, very well and is the most profitable of the three, but all three are doing great. Now, we're going to be selling out in two ways. One way is the traditional, what we back tested and we've been using for years. 2 years ago, it made $4,300, maybe $4,200. Last year, it only made like $4,450. This year, we'll see what it happens. We're selling out January 2nd, 3rd, and 4th at 6:45 a.m. California time on each day. Or once that point in time comes, we're going to be putting a close sell stop under the market so it won't go down too much before we do take a profit. Depends upon how much elbow room I've got, if I do have any, next Tuesday, Wednesday, and Thursday. So I'll also be on the Ninja Trader, by the way, Traders Workshop show for the second time next Tuesday morning. We're going to record it, and then it'll be available, I think, pretty much right away, maybe even real time, and then it's been recorded so you can play it back later. Next chart is going to be futures, futures, futures. In the 10-year, and the S&P E-mini continuation contract, you can see that we're overbought in new high ground, and again, a prime target for a sell signal. By the way, if you've got any questions, email me at info@ersignals.com. Maybe you want me to analyze in this YouTube a particular symbol of your choice. It could be a stock, forex, crypto, futures. I don't care. Put me on the question block here. Put me on the stand and ask me questions. Next, NASDAQ, continuation. Same story as the E-mini. Slight new highs, overbought for the last couple of days, including today. Today's the third day. Again, overbought. Doesn't seem to want to, and you know it's coming, have a significant downside correction. Next chart, bonds. Well, we bumped into resistance, another different level, well above my initial upside objective or expectations, when the bottom of the market provided us with a green bullish ER buy signals. That's what I wrote the strategy for. This is what we get frequently is turning points, green or red on the green low day of a big swing down and hopefully a big swing back up, like this one is gigantic. Next chart, and I'm still bullish long-term in bonds, but it's overdoing it, typically. Expecting a correction, probably back to 123 minimum, and maybe even back down to 120 or so. Next chart is the 10-year notes. We're still long from the buy signal, almost at the lowest low, and hanging on to this trade, doing absolutely great. The formation turned out to be, past tense, a bullish head and shoulder bottom formation, which had a little double shoulder low around the beginning of October. The head of the formation is a little flat 6 days sideways trading range, including the bullish engulfing at the bottom, and our new long ER3 position 2 days later. We've managed to ride this up all the way, and we are still in a long trade, losing a little bit of our equity at the moment. Don't do that. Let's get this back into position here. And I don't like that. Go away. Got a little problem. Let's grab it. There we go. And our stop is in place and moving up. Can't help it. Fantastic trade. Looking great. Next, crude. Big sideways trading range for quite a long time now, a year and a half or something. Came down to the bottom of support, finally in oversold condition, turned around, rallied a little bit, couple of weeks, and now I'm looking at a test of support again. Short term, bearish. Intermediate, a little indecisive, and longer term, big sideways trading range. Also, no major long-term bullish or bearish breakouts. We're getting caught between a rock and a hard spot, and until we get some decisive major long-term breakouts, I have to turn to shorter-term type trades. Next, natural gas. Got oversold, has rallied past tense. The rally may not be over. We're not very close to overbought yet, and I could easily get back up to probably 2.9 and a half, maybe even 3-ish. Next, heating oil. Got back up into resistance a week or so ago, and now pulling out of this resistance area to the downside, and probably is going to come back down to the bottom of this downward slanting wedge or pennant, basically the same thing. And that would give us a move down to 2.3-ish, maybe. Yeah, that's about right. Maybe even 2.2 if it takes too long to do it. So I'm modestly bearish short term. Gold, overbought. Looks like we could have a bearish engulfing sell signal today. I kind of doubt that, but there's a possibility of it. Looking for a continued move down to at least again test a support area, which didn't work all that well a month or so, 3 or 4 weeks ago. But we'll see what happens next. Because of the overbought condition, and it looks like with the higher high today and a current quote that's lower and near the low of the day, we could be starting this next downside dip. Again, at least back into the blue zone here. Next, silver. Same kind of commentary, major bearish engulfing, huge move to the downside, short term, past tense. Now what? Looks like it could start to slip again. Precious metals have had great signals this year. Sell a signal on top. That one didn't work very well. Sell signal on top. Buy signal on the bottom. Sell signal on top. Buy signal on the bottom. A double top with both ties having bearish engulfing ER red sell signals, and a gigantic buy signal on the bottom. Now, come on, past performance is not indicative of future results, and hypothetical returns have some inherent limitations. That means you can't depend upon it being forever as profoundly important, these terms, but you never know. Next, platinum. Overbought, looking for a turn down. We did catch a low, a high, a low. This one's great on the highest high. Great sell signal, great sell signal, great signal, a good buy signal. Even in platinum, we've had great signals. So all three precious metals. Copper is going sideways today, a little bit lower, but it bumped against resistance yesterday. The longer term trend is obviously down. Although it's broken a significant bear trend line, that does not guarantee it's starting a bull trend. I have a lot of problems with this resistance area doing exactly what it seems to be starting to do, and that is to turn the market completely backward again, back down. So I'm turning definitely neutral with a little bit of a bearish indication coming up here, maybe. So no solid opinion at the moment. Soybeans. We got the bottom of the break with an ER buy signal. It hasn't been doing very well. We're a little lower on the day at the moment with a small loss. And it's just going sideways. The lows have been a little bit higher to steady. The highs have been a little bit lower. Yep, the lows have been a little bit higher, and that defines a pennant formation. Lower highs and higher lows over time. This looks like maybe a flat bottom right triangle, which is a form of a pennant. Next, bean oil. New low ground on a closing basis, but it got oversold, not unusual. The market doesn't look like it's bottoming out quite yet, but I would be a little concerned about going short at this particular level. Nothing new. Don't like going short with an RSI of 27.7, and it was oversold below 25 the last couple of days. So it should rally some more, but it's not showing any strength at the moment. Next. Oh, yeah, and by the way, the soybean oil here had a double top formation. We got short on the second high with a bearish signal. That double top turns out to be the head of the shoulder, head and shoulder top. And since we got short at the top on the second high and rode it all the way down, it was a spectacular bear trade. Now the trend continues. I think we're going to see lower levels. Next, meal. Same thing. We got down to support. It tried to hold, rallied just a little, broke support, bounced again, but now it's resistance. Dropped to a minor new low a few days ago, rallied back to the resistance level, and now it looks like it's going to make new lows again. I think that's exactly what it's about to do. Next, same commentary for corn. We were long. We ended up with a very small trade, very small profitable trade. And now it looks like it's about to make new lows. As I have been saying most of the time, corn's going to go the way of wheat, meaning bear trend's not over, making new lows periodically, rallies don't hold, and the new lows are made shortly after that. Wheat has been doing that for quite a while and in new low ground for a long, long time on this continuation chart. Next, cattle. We're still long with a small loss. And the stop is in place, hasn't moved up yet because there hasn't been a significant enough move to move the stop. If we start making new highs, which I hope we will soon, and you never trade on hopium, by the way, that's just a comment. The fact is, buy signal and it's going sideways. We're not out. So I'm expecting a higher high. It ain't happening. Don't have a real large risk here. If you're not in this long position and you're interested in going long for some reason, this is not necessarily a bad place to consider being a buyer. Your risk is a little smaller than my strategy. Therefore, your profit potential may be a little bit larger. Next chart. Live hogs. At support exactly. I don't think it's going to hold. It's already been broken twice. I think it's about to make a low lower than 65.66. And that'll be a new low since November, which was the lowest low since June. And maybe we're going to come down to 56 or 57 flat. Next stop, 57. Next, OJ. What a ride. Fantastic. First shoulder on the head and shoulder top formation, bearish engulfing ER sell signal, dropped like a rock for 3 days. Hit support, oversold conditions, bounced all the way farther than I originally expected into new high ground. But again, it had another bearish engulfing sell signal, and I expect the market to, just a second, get rid of this phone call. Oh, gosh. Good. I expect this to start rallying very soon. It's oversold, so it hasn't started yet, and we're still short, and we're still liking it because we're in the trade. Never got stopped out. Now, normally, I'm noticing, by the way, we're now making minor new lows for the day in the spider, which is essentially unchanged. The Qs have just turned red by a tick or two, and the DIA is hanging on to a very small profit for the net change higher on the day. But while I'm finishing this YouTube, maybe all three will turn red. Watch out now. If we get below yesterday's lows in these indexes, that could be the beginning of a break. OJ again. Shoulder, head, both ER sell signals at the top of the market included. Last shoulder high was 1 day earlier than I expected and a little bit lower than I expected. The middle of the circle was my forecast for a possible turning point. As you can see, I was off a day timing wise, and I was a little too high price wise. Now, oversold. The minimum downside objective is 287, 60-ish, and so far it's heading straight there. Although I don't think it's going to get all the way to my minimum objective without having a rally first at any time now. Maybe just simply back up to close this gap, which is about 340. Next chart, cocoa. Looking for cocoa to start to slip more. This has the earmarks of a rollover slow, and the beginning of a dip down to at least 4,131, and 4,095 is very possible. Also, 39.49 is not out of the question, and that's my best guess in terms of support and where the market is likely to bottom out. Next chart is coffee. Really can't come to a very good decision here. Support could hold on a minor dip. Overbought conditions did get resolved. It backed up for a couple of days, and now it's trying to make new highs again. But it's got this massive resistance area that goes back to essentially November 21 all the way into October of 22. It stopped it once before in April and basically also in June. But this time we managed to get a little bit through it, but the trend is not really changing. Okay, no comment, but it looks like it's going to make new highs. Next, sugar. Finally a good rally out of oversold. Took a few days for it to bottom out. No particular signal involved. First resistance is right here at 22.12. Next resistance is up here at 23.68. I'm going for 23.68 for the upside objective to begin to come into more important resistance and then turn down again. And cotton the rag is rallying slightly. It is caught definitely between a rock and a hard spot where it took it, a month and a half to bottom out in here. And now it's trying to break out of this little month and a half bottom so it can rally back up to 89, 88 area, but hasn't been able to break out of it yet. Next is the E-mini. You can see we're starting to slip back down. Again, if you've got questions or want me to analyze a symbol or instrument, email me at info@ersignals.com. You have a great trading day. Happy holidays to you. Bye-bye.